Hi, Ron. It's Monday, start of a new week. It's week 35, 2025 already. So we're heading to the final third of the final week of August. It's a late summer bank holiday here in the UK, traditionally a very wet weekend that marks the end of summer. UK schools go back next week and back to the sort of winter season or the autumn season, autumnal fall, as many of you will know it as, kicks in properly here in the UK from next week. Excuse me. So markets are closed here in the UK. So the forex market, the volume's much lower today, without London banks churning the handle. But here, this is the S&P 500 next to me here. You can see we was a few trades we took on Friday evening. The S&P was long, the Dow was long. We were short dollar Swiss, long gold, and short pound Aussie as well. I actually posted that wrong. I said pound Swiss. It was pound Aussie actually on Friday night. So we got one, two, three, four, five open trades. They're all still open at the moment. Pound Aussie came quite close to T1 target one this morning. It's not bounced off that, so we'll see if that move is over. But this is the excuse me, cup of tea, middle of the afternoon. It's 3 o'clock here in London, so it's the English love their tea, and I'm no different. So, say, hope you're all well. Hope you've had a good August so far. If you're on your holidays, make the most of it. Things this time next week, 1st of September, it's Labor Day in the United States, so US markets will be closed next Monday, but plenty to get through this week. We'll come to that in a minute. And the main reason we're here today on a Monday, Monday's usually really quiet when it comes to data. There's an interesting data dump coming up in a minute. The new home sales, 635,000 is expected for the July number, an increase of 0.61% for July. When I was looked at US, I mean, there's lots of talk that the housing sector in the States is there's too much supply. So it'll be interesting to see how the sales have held up or not held up. But really, my caveat or my sort of bar was always around about 550,000. Anything over 500,000 a month shows a pretty healthy US jobs market. 550,000 really is the bar, was the bar, and it just shows you the how things are in the United States. We're over 600,000. We've been much higher than that, but we have got this oversupply in the US. But certain pockets of the housing market in the US is very strong. A lot of it is very weak as well, not only regionally, but the type of type of property available. But if you want a bit more, we can do a bit more detail on home sales. And the reason home sales in America, they report existing home sales, pending home sales, and new home sales. So existing home sales are obviously second-hand ones that are already built and swapping hands between people. New home sales are literally that, the new timber products that they favour in the United States in their building market. Remember, the mortgage market in the US is very different to lots of other parts of the world. Remember, mortgages are a loan that people take out to own their own property. It's a big target of many in the developed world and developing world as well. Properties are should be part of anybody's portfolio. Very illiquid compared to trading forex, for instance, but a key asset and has grown significantly over the years for everybody that's held any property portfolios. Obviously, there's risk in it with any type of investment, but anyway, new home sales expected to look rather healthy. We'll see what that looks like literally as we speak now. So let me just refresh the calendar, and we'll see what that looks like right now. So they've come in better than expected at 652,000. Last month's been upgraded by a few thousand from 627 to 656. So again, could be front running tariff impacts on people. Other related data this morning has been the building permits for July. That's also better than expected. So you need obviously building permit before you can build anything. So that's like suggesting what may come in the future. And the monthly actual building permits level has actually fallen. So although the headline numbers, the approvals have gone up, those that are actually being activated have actually it's fallen quite significantly. So that's quite a negative number. But again, it's not as bad as expected. It was expected to come down at minus 2.8%. It's coming at minus 2.2%. But you see, it's quite a significant turnaround from the June number. Okay, less significant. It's only got one bull compared to the actual number of permits that are going through. That means builders, whether it's companies or individuals, have got the permit to do what they want to do. Obviously, getting planning permission thereafter is the next stage. But the new home sales are those homes that have been completed or either off plan or agreed to have been sold for July. That's coming at 650,000. So again, it's 100,000 above my sort of barometer, my line in the sand at 550,000. So that's suggesting a relatively strong new home sales market in the United States. You obviously got to, as I said before, you've got to put it all together to get a full picture of housing in the United States. And I say some very significant weak pockets, but there's still some very significant growth areas as well. Certain both type of property and obviously where they are in the United States as well. So anyway, new home sales better than expected. The S&P 500 probably hasn't reacted much. That's the hourly chart. This is the S&P. Let me make myself a wee bit smaller. So the chart looks a wee bit bigger. Doesn't make the chart look any bigger at all, does it really? So a wee bit better. So there's the hourly chart. We've been down into the 20-hour moving average this morning from that big spike we had following Powell's comments, dovish comments, suggesting that, or the markets interpreted it. Let me put it like this: that there will be rate cuts coming in July, in September, the 17th of September. Remember, however, they've come down. From a month ago to even a week or so ago, they've come down significantly. They picked up obviously significantly on a Friday following his speech. If we just look at the where's the CME group here? If we just look at I meant to open another tab, but anyway, come back to the chart in a minute. You can see we're at this 86%. So we have been, as we said last week, we've been how we have been in the 90s. I mean, a week ago it was 82%. We're at 86%, so we'd expect it to be a bit high. So there's still quite a feeling, or a significant feeling. You can't rule it out completely. 15, 16%, 14% currently that they will not actually move when we get the data. So we still got another new non-farm payrolls week after next. And we've still got a reading for PC to come this Friday. We got another reading of CPI in September before they start their meeting on the 16th, and then the report on the 17th. So as you can see, that from a month ago, big old expectation that we will be moving rates down in July. In September. Obviously, the reason is. What is the reason are they doing it? Is it they feel that inflation going to a new level, as Powell said on Friday, and is it just a one-off? The danger with that is they've been caught out with this argument before, haven't you? Remember when they were talking about the temporary nature, or transitory nature was the word that we're using, wasn't it? For the post-COVID spike in inflation, that hung around a lot longer. And history shows, Jay Powell and his members of the Fed should, be aware of history. I'm sure they are. They're much brighter than I am. But the data shows, going back years and years and years, that inflation can be very sticky. It does hang around for a long time. We've had this reduction in goods inflation, but recently we've had this spike back up in food inflation in particular. Here in the UK and Europe and other parts of the world, the US is also vulnerable to that. Obviously, energy costs have come down as the price of oil has come down. Expectation that the situation between Ukraine and Europe, Ukraine and Russia would improve has obviously hit the oil price. That's stalled as it's risen and come back down again. That peace process seems to have stalled in the last week. Remember all the euphoria last Monday when Zelensky was meeting Trump, and the previous Friday in Alaska. They're still firing missiles. People are still being killed in that conflict. So there hasn't been the progress certainly Trump would have wanted. But anyway, 86% chance now of a new a rate cut, new level of rates for the United States in July. So what does that mean for our trading? regime. Well, basically, we still got the weaker dollar, haven't we? So the S&P here, that's what we were at when the deal came out. So we've found support on the 20-hour moving average. If we look at the sort of reaction to the stock markets here in the 5 minute time, and there's the news breaking at 3 o'clock my time, 2 o'clock GMT. Not the biggest volatility of the day by any means, but certainly significant. Obviously, the stock markets are now open in the United States. That's the opening. Sorry, it's a 5 minute candle. So we opened at 2:30. Sorry, here 2:30. This candle here. So that's the opening 5 minutes. We've been tricking. This particular strategy has been long since since 2 o'clock here. If you got your stop loss a bit too close to trade the open, you'd have perhaps been stopped out as it's whipped down here. But the we certainly moved up ahead of the data. The data took us to 6,459, and we're currently trading at 6,456, 57. So we're up a tick on the day, and on the where's my forex line? I need that, and my opening days. So we are ahead. We're sort of back to where Nasdaq is even. Dow's down 100 points, and the S&P is still down 8 points or so from Friday's close. So that's the indexes. If we look at the dollar today, dollar crosses the majors. Euro 117, sterling 135, big round numbers in play there. Dollar CAD 135.25, Aussie just shy of .65. So the big round numbers in play as we speak. So let's just go through. Let's do it from bottom up for a change. So sterling at 135 at the moment. Again, remember London is closed today, so not surprisingly, lots of orders around the big round number at 135. Friday, we went as high as 135.40, 135.45, in fact, before we moved lower into close. Now we've just been pivoting around 135 today with little volume, little direction from London. Our highs in the was before the cash open this morning. It hasn't been a cash open. So the 7 o'clock high was 135.26 for the European high. Moved some, what's that, 125? Have we moved? Yeah, so 148. So 15 pips under 135, 25 pips above 135. So a bit of a 40 pip range today in no London session for sterling. So again, support at the 20-hour moving average today. Little direction, not one I'd be trading on a day like today. Certainly on an intraday basis. Obviously, the action is across the pond in the United States today, but certainly that's better than expected. New home sales will be a bit of a lift for the administration as well. Euro is if sterling's pivoting around 135, euro's pivoting around 117 today. We're just above 117 here, but again, similar sort of pattern. We had this big lift. We went to 117.40 on Friday. Dollar came back into close, and we've drifted into the 20-hour, and then found some buys around the 20-hour earlier this morning. But we can't really, again, another one, we can't move much higher than that. The 5 and the 9 hour moving average, see that's very, very flat, very horizontal. So not a typical Monday. No big support there for dollar. If we just go up the time frame, so the 4 hour chart has held the gains on most of the gains of Friday's leap up post Powell. And again, big support here. Flat level 50, the green line, and a rising 20 moving average here. 20 crossing the 50. That's relatively positive in this environment. Into 116. Up to 117.45, we said before, and we're still holding 117 as we speak. So 117 through there where we are. So break away from that needs to substantiate the move higher. If not, we're back to test this sort of hourly pivot area or 4 hourly pivot area around here at 116.50 range. See that? I'm saying the pivot area because it's through through here. Okay, these turning points here. Okay, 4-hour time frame. Obviously, that's on this time frame. Okay, and then the daily still remains relatively positive after Friday's big heave ho to the upside, big engulfing candle. Finally, Powell spoke. It's engulfed. Look at the activity. It's engulfing all of the July and August. Sorry, all of the August second half has all been supported here at 116, and it's just taken out of all of that traffic. See what I mean? So the surprise really from Powell suggesting though that they will move on market. I say the market interpreting. He didn't actually say that, and they never do central bankers. But the interpretation from everything the other central bankers have said. See how this massive candle on Friday has engulfed all the previous action, and the significance of it. When you looked at this on an end of day, as I did over the weekend, you see the closing high was above this resistance where we are now at 117.03. So the 117 resistance here for this 4-day zone here is we were moving up, and before we had the last move down back into 116, meant we closed significantly, or significantly enough, I should say, above the 117 area, 117.15, 117.18, I think my close was. So a bit of a shakeout today. We're down, but big move higher on Friday. And it still means, though, that our 50 and 20-day moving average still just shy of 116.50, but continuing to move high. You can see the angle on that. So it's still supported. We're still moving up. So the daily remains positive. The 4-hour remains positive, having a big, what looked like a quite significant move down into the 116. That's what it was, a leg lower. And now we've leaped higher. And so next line in the sand is this area here, this 117.52 area we had clustering around here for the 4 hours, which takes us back to those highs at the end of July, before again we crashed down to 114. So, forex trading, not for the faint-hearted. So euro remains bid, dollar generally on the back foot. So CAD 138.25, market reversing for the dollar significantly again on Friday, and but still holding 138. So we got over 139 last week. Dollar coming back, and we're now back into this cluster area. We're not quite back into this. See this on this 4-hour chart. We're not quite back into this cluster area. So this entry area here from a previous trade at whatever it was, 138.10 is that sort of box here, and we're still holding above it. So that's relatively positive. Just ignore obviously on these targets and ranges, but now they're coming into play. So here on this 4-hour time frame, see what's happening with these moving averages. The 50s moving up, the 20s moving down. That could be negative back to the downside. So a break of 138 is what the bears will be looking for this week. A hold of 138, or even as low as 137, sort of 85 from earlier in August, is what the bulls will be hoping for a move higher. The bears will be looking for a break of that zone to move lower on that time frame. But again, just tick it up a time zone to the daily, and the shakeout we had at the beginning of sorry, that's 1 hour. I've gone wrong there. To go to the daily. The shakeout we had on Friday meant the rejection of that 139 just on the 4-hour time frame, but a big hold of the 138 area. Let's hope everybody can hear me. I'm writing messages here. It's the case. I'm rubbing it on. Atto, hello, my friend. How long have you been in the game? How long have I been in the game? I don't know how old you are, Atu, but quite a while. I'm over 60, and I've been doing this for well over 30, well, not well over 30 years, about 30 years now, with real skin in the game. The death of Princess Diana was a pivoting point for my investment career. That's all I'm going to say. Atu. If you want some more details, watch some of my webinars. But yeah, I've been around the block a while, and that's why I'm at the proptrade.com. These guys know what they're doing. We've all been around the block a while, so we're secure, we're transparent, we're clear. You see what you get is what you see. There's no silly rules. I mean, one of the big things I really like, I've been in this business for a long time, I really like about a prop trade business generally is this idea of you've got to trade with some discipline. What I really, really like about the guys at the proptrade.com, our company, is that, it's all, a very simple website, clear, modern, up to date. I love the green as well. Is that the evaluation phases, two step, one step, are very clear. You understand the rules from the offset, and anybody can do this. Anybody can be a successful trader. The big thing, the reason that most traders fail, and still 90% of traders blow their accounts, or blow up or lose money, and they can't get back on the can't get back on the saddle, is they risk too much. And one of the big things I say about the proptrade.com is our rules make you stick to a risk averse strategy. So, for instance, here you can start with start with a $5,000 account if you want to. One step, one step. Most people are also in a rush, so to look at the express accounts. One step. What do I have to do? Well, I have to get 10%. I have to make a profit of 10%. I can only lose a maximum of 7% of my account, and that's where most people blow it because they risk too much. Whether they're trading, here at proptrade.com, whether they're trading futures, whether they're trading options, whether they're trading CFDs or spread betting, as you can do here in the UK. Most traders risk too much. They let their emotions take over. They don't have a structure. They don't understand risk management, which is very simple. Understanding yourself, understand some simple maths. What is spread? How does leverage work for and against me? If you don't understand any of those basics, guys, stop now. Go and do something else. Okay. I'd say what have you said? That's respectful. I just started learning myself too. Greetings from Finland. Hello, Finland. Okay, well, I love Finland. It's on my bucket list. The berries this time of year, the forests, the lakes, land of the rising, endless days here at this time of the year. But so if you are, I think you are. We'll see. But yes, I used to work with a guy from Finland, Cyprus, a very well-respected guy in this business. So good luck. You've got a great education system as well. I love the way you look after your children. You look after your country as well. So anything you want to know, Atu, please let me know. AATU, so you get the top of the calendar, don't you? You have AATU people's accounts. So anyway, that's prop trading. You don't have to invest very much, but you are trading. Let's be clear, you are trading a simulated account. It's like paper trading. As I started, it's not real money, although you use real money to buy your challenge. The beauty of this, though, is you practice with paper trading. You do it's let's say you're just doing the phase one. You then get a funded account, and it's simulated funds as well. But if you're successful with those simulated funds, are capital basically. You can take away after 3 days, literally after 3 days of trading, being that much of a rush, 80% of the profits that you've made. So there's no target when you have a funded account. But the key thing is, which lots of people get through the phase one, often get through phase two, get to the funded account, and then blow it there. Because what happens is subconsciously you think, that's it, I've made it, I've done it, I can do this. And then you blow the rules. You end up risking too much. You'll risk more than 3% on one particular trade idea, or you'll get greedy, or you'll get panicky because you've been losing. So you'll risk a bigger amount than you should, trying to get even or trying to get money back to the money you've lost, and end up over trading and blowing it. So that's why you've got to stick with discipline, with patience, with understanding yourself. And that, I'd say, if you've only been doing this a few weeks or a few months, is the key thing. Once you understand yourself, you understand your level of how much risk you can cope with as a human being, because we're all different. That's when you can move forward, because this business is a mindset business. It's not about listening to old guys like me dribble on about what to do with the charts and moving averages and all this sort of stuff, candle patterns and all the rest of it. It's about understanding yourself first and foremost, because anybody can learn to trade. Anybody, wherever you are in the world, whatever sort of level of education you've got, anybody can learn to trade. It's about finding something that works for you because there's thousands of successful strategies. There's five on here. All of these strategies I have on here, these layouts, let me just show you them. All of these work. You know that my this default one, the crossing. I've got a Bollinger Band, a stochastic setup. I've got the demo one there is two different types of moving averages, and the MACD and there's the parabolic SAR. That's another sort of flipping one. They all work. It's just how well you apply them. That's the issue. And we're all different. Hence, not everybody's driving around in Lamborghinis as the guys were talking about yesterday on the Discord group. So that's to get on the Discord group, ask your questions there. I'm there most days, most times of the day as well. So best of luck. Jatin, good afternoon. How are you? Hope you're well, my friend, or good evening. What time was it? Yeah, good evening, I suppose it is. Uh, Not enough people talk about the discipline and controlling emotions. I agree with you on that. Being disciplined and sticking to your plan is really important. Atsu, if you've never read this book, go and find it, my friend. And same with you, Jackie, or anybody that's here today. This is called Trading the Zone by Mark Douglas. This talks about, it's very quite dry and boring, to be honest. Let's be honest. Subtitle is Master the Market with Confidence, Discipline, and Winning Attitude. I found this in the early noughties, late 90s, and it completely changed things for me. It's a mindset business. As Mark Douglas, unfortunately, died a few years ago, but it talks a lot of sense. You're on YouTube, you're watching me on YouTube, aren't you? So if you Google on YouTube Mark Douglas, Trading in the Zone, you'll see all sorts of people explaining what's in this book. You'll see Mark himself talking about, discipline, understanding yourself. But yeah, there's trying to find a quote here, but there's hundreds of quotes, hundreds of things. But the key thing that did it for me was this: at the beginning of the book, there is a 30-question simple answer attitude survey. We call it. It's called. You either agree or disagree to the questions being posed. It's only 30 questions, very straightforward. For instance, number 5: my risk is always defined before I enter a trade. Do you agree or disagree? Do you agree or disagree with that? Just answer the question. Read the book, and you'll be amazed at how your answers may change. Mine certainly did change at the end, because at the end of the book, there's a survey there again. You'll be amazed at some of the different answers you will give, having read the book and absorbed the book. It's one of those sort of references. It's not a real book to read at bedtime. It may send you asleep. I've sent me asleep a few times. It's written in a bit of an old style as well these days, but it's very, very well worth getting. Trading in Zone by Mark Douglas. I recommend it. I recommend lots of trading books as well, but that's just well, I'm not sure how it really works there. But yeah, get a copy of it, my friend. Where to learn the skill? Well, absolutely, because the thing about trading psychology, as we call it, or risk management is numbers. Money management is numbers. Percentage of your gains and all that sort of stuff. Understanding spread, understanding leverage, all that sort of stuff. That's just learning, and that's numbers based. So keep the numbers simple. In percentages. I want X percent, or I think I've made X percent today. I've finished that enough. Thanks very much. I'll walk away. I love, for instance, I'm a trend following end of day trader. That's where I made all most of my investments. That's what my trading investments. That's where they are. But I also like a bit of a dabble in scalping, so short term trading. So I like trading the German DAX because it's just something that I seem I feel quite in tune with it. I know that might sound a bit hackneyed and old fashioned, but on a Monday morning, the market is opening. So here this morning, on the 5-minute chart, this was the high at 7 o'clock. This German market doesn't open till 8 o'clock my time. So we've been going sideways here from 3 o'clock. We've been moving down. So the pressure, the general direction was down. That was the high of the day. So on when I first looked at this morning at 7:05, it was a big red down candle, the size of that candle compared to the previous ones that's been going on. The what last biggest candle was also a down, so the trend was down. It was under my moving averages, so I was very much short into the cash opening of the week. That's the other thing about Monday morning, it's the week opening. So any news that's happened over the weekend, since Friday night, since the market closed in Frankfurt on Friday night, that affects the German stock market and other stock markets generally, it gets, exercised, if you like, first thing on a Monday morning sometimes. So we were short all of it. So we trailed that down there, and got out just before it opened because I don't like having, you know, cash in the game or skin in the game in the volatility of the open. And as you can see, the 5 minutes on the open, gave back all of this big gains we'd had down here. So what happened? Well, we moved up, and then within 5 minutes of opening, we were short again, and we went down. So trend, and then it petered out. We got high. That looked like it was going to go weaker again because it didn't get as high as it had here 5 minutes after the open, here an hour after the open. So after an hour of the opening trade here on Monday, we were short. That was looking quite good. And what's happened since then? Um, After the opening frenzy, we have actually started to move up. But again, we were short all this time. That would have taken us long, taken out, and then got a final long there at 7:30. If you're still trading this, I wasn't still trading this. I just traded it between 7 and 8 this morning. So it moved down. Then it's moved higher, higher, down into a sort of sideways action. Then it's gone higher again, and then it looks like so far here at 14:25, which is literally 5 minutes before the US market opened in New York and Chicago. We put in a high of 24,378, and then we've been down since the US Open here for the last whatever it is, half. So for the first hour of the US Open, the German market has gone lower, but it has gone under the red line, the 21. That's what about 50. So anyway, sorry, my point was, I'm ribbling on. The point was, have a system, have a strategy, trade that system, trade that strategy, but find what works for you. More importantly, it's the key thing. Whether it's on a 5 minute time frame like this, or on a daily time frame like this, that daily trend, the higher trend, is still relatively positive for the DAX here for this particular asset. So anyway, so yeah, Jetting, absolutely. I've read it. Actually, I think, to be honest, I think I've only actually read it cover to cover once. I've obviously dipped into different parts of this book many times. I've given this book away many times. As many as many guys in the African continent got a copy of this from me because I'm very, very much a great fan of Mark Douglas, and because he changed things for me and many, many traders I know. Written it as well. That's why I'm on promoting books. Not that I get any commission in it for anyone. Uh, a guy based in London, a guy called Steve Goldstein, who's has traded for banks in the 80s, is similar age to me, Stephen, and he's got a great podcast. His podcast is Alpha Minds, isn't it? Alpha Minds is his podcast. He's anything great, great trace and lots a lot of sense. And finally, after many, many years, he's put his thoughts down in writing. So mastering the mental game of trading. This is actually easier to read than the Trading in the Zone, but Trading in the Zone is a real sort of classic. And Steve's got this four-step approach that he's talked about. Similar sort of stuff, because none of it's rocket science, none of it is new. A lot of it's common sense. But Steve tweets a lot as well. So he has the four steps: the mental game, mastering yourself, the key to trading mastery. There we go. There we go. So Edmund Hillary, the British guy that first conquered Mount Everest in 1953, I think it was, or 52. It's not the mountain we conquer, but ourselves. And that's absolutely true when it comes to trading. It's ourselves we're trying to beat or conquer, not the charts, not the graphs. It's emotional control. Really, really is. Sorry, I've blathered on enough about that, but that really is one of my sort of hobby horses. Trading psychology and understanding yourself, managing your discipline, managing your patience, and understanding the simple numbers involved and getting out of losing trades. That's the other big trick that we all must accept losing trades. Hard, but we've got to do it. Okay. So anyway, enough of my soapbox. Where was I? I was looking at the forex market. I was generally saying we've got a generally weaker dollar. So dollar yen, 147, 40 at the moment. Looked like here on Thursday, dollar was holding its gains. It had broken out of this channel it had been in from the beginning of the month here, following the big shakeout. Looks like we're going to get some back. The big shakeout we had on the non-farm payroll on the 1st of August, but we're still channel bound. But when we reversed, the dollar reversed, obviously, with the rally we saw in the stock market on Friday. Closing under 147 was the key when we looked at this over the weekend and into the 50-day moving average, but it held this morning and we've moved higher. If we just take this up to the next level, these are the weekly charts, which obviously we look at over the weekend. The trend is still to the downside, but it's a bit messy, that isn't it? You can see that the 20-week moving average here, this red line is flatlining, and we've been into it, and so far last week we bashed right into it, but we've also rejected high. Remember, wicks are rejection of higher prices. We did that quite aggressively, obviously, on Friday, and for the weekly, it meant that we were down for the week, and we closed right down on that 20-week moving average for the first time in 6 or 7 weeks. Here, wasn't it? Beginning of July. So it's 1, 2, 3, 4, 5, 6, 7 weeks we've held the 20 period. This morning we dabbled under it, and then we've come back. So just to see what that looks like come Friday, that weekly candle. But as I say, everything kicks off properly again, volume wise, next week when the US Labor Day is over on Monday. So next Tuesday, everything really ramps back up to normal. It doesn't impact the forex market as much as other markets, but certainly the forex volumes also pick up next week as well as we start September and the final third of the year. So dollar yen holding 147 or pivoting around 147, a bit like the euros pivoting around 117 and cable is pivoting around 135. Like normal sort of maneuvers for this time of the year. Elsewhere, we talked about CAD doing it. The Aussie doing exactly the same thing, but this time the key level for the Aussie is the 60.65. So that's the weekly. You can see again a bit of a sideways action there to come down the time frame. So daily, again, looked like the dollar was in a right old run for 4 or 5 days, and then all gobbled back. Aussie bounced back, and today we're up again, back through the 20-day moving average this morning. We opened right on this. There's an opening gap, which is positive, and we're back to the 65 level. Got within 10, 15 pips of dot 64 on Friday, on Thursday's close, Friday's open. But we rallied really strongly post Powell. Next upside target for the Aussie is that 50-hour moving average. But from a trending point of view, we've flatlined because we've gone up, we've gone down. And so that resistance at the 50-day moving average at 65.15, just above the 65 level, is quite a significant resistance. But holding this 20 period moving average as well from Friday's rally will be key this week as well. We'd expect perhaps a bit of a decline into this candle, perhaps this week. Same with all the other crosses against the dollar following Friday's big candle. As you can see here, last time we had a big move down, and actually heralded a couple of days later a bounce. So again, if we don't break the 50, we can't hold this 20. We could move back down to this mid 64 level for the Australian dollar before the month's out, in fact. Jatin, it'd be interesting to have your feedback about what you think about the book and how you did, if you did in fact change, if you've done the key about doing the questionnaire at the beginning of the book is really do it. If you haven't done it yet and you've started reading it, do it now before you get any further into the book. And then do it again at the end if you get through the book and see how see how you fared. And be interested for your feedback on that and see what you think about it as well. If you don't mind. That's great. Okay, so that's the forex market. Crypto, Bitcoin continued to decline over the weekend. Uh, Following the spike on Friday up. So Saturday, Sunday we were down, and as we said last week, 112 was the big key support area. So we were under that yesterday, so quite significant at some point. This morning we'd be down as 110,000. So the move down, some would argue, is complete, and there's a bit of an argument for that. 112,000 was a previous resistance to this upstart, this rally we'd had from April. So there's that 112. Now we legged down, and we legged down. Then we sort of moved up. We remember we were talking about this during the early summer, the July, the 20 day, how the 20-day provided that support, provided that curve. Then we had that breakout of this range. Then we broke the 112 area on that 10th of July handle. Something going on. Further buying on the 11th there. So uh, three white soldiers, strong movement. See how the candle sizes increased, the body of the candle size increased. We had more buying, and we topped out here, hit a new all-time high, 124,000, wasn't it, intraday on the 14th, and then went sideways. And then remember we were talking about there's some signs, technical signs of weakness. We had some divergence here on the RSI and the MACD we were talking about here in the end of July. Indeed, we did then get that sell off, but the sell off stalled. We breached the 20 day, but the sell off stalled at the 50 day. And then we had that next level rally up. And then we had another new high posted above what was the 123,000. And then we had that intraday high, 124,000. So we were over 120,000. But on the same day, we came crashing back down, and then we haven't recovered from that delay. Again, Friday, it looked like we were perhaps back over the 50 and the 20-day moving average, but we've had a weekend for Billy Bitcoin, and down we are. We've tested and traded under 112,000. Are the bears now happy and complete from this move from 124,000, 112,000? There may be some more weakness in that. If we breach this on an end of day candle basis, you can see we didn't the first time. We may this second time. Too early to tell at the moment. We will certainly be moving in, or not certainly, but we will, all intents and purposes, we'll be moving into this zone, this 105, 106 zone, and then technically, then psychologically, is this 100,000 zone as well. So this zone here between these two green lines, the big 100,000 and the next big targets to the downside for the bears for Bitcoin against the dollar. If this 112,000 level holds, you can quite easily see a new all-time high being posted as well. But at the moment, technically, it remains short. We're under the 20-day moving average. Our highs haven't got back to the previous high levels when we were above the 20-day moving average, and we're also now under the 50-day moving average again, courtesy of the weekend trading. But again, obviously the volumes there were a bit weaker, but it has moved us down. We haven't recovered today as well. So 112 is targets for the bears, and that's been hit at the moment. So wait and see where we go from here. But the trend is to the downside as far as Bitcoin's concerned. And Ethereum, we've started talking about it recently, is in a similar pattern, although a bit stronger. There you go. There's Friday's rally, and that's the weekend shakeout. So Ethereum is the coin to have. So maybe swapping from the big daddy of them all to Bitcoin to its smaller brother, Ethereum, and it's had a really good run, as we've said over the last few months. Ethereum, gold. 3373, so it's held its lift, its sort of recalibration, if you like, from Friday. Again, the trend. We were saying this last week. Not a lot going on. No direct trend. We're just sort of pivoting through this 50 and 20-day moving average, up and then down, up and then down. Up until Friday, well, even now, the trend is still really quite relatively sort of very much sideways action, but biased to the downside, even though we did breach the 20 and 50 day significantly on Friday and moved to some significant levels at 3,375 highs on Friday. My system actually triggered a long this. So I've actually got skin in the game on gold for the first time in a long time. From Friday night, we went long here on close, and I don't know if we're out the money or in the money at the moment. It's got more this platform we're in the money. I got an initial target just here to start off with 3375, and then obviously, well, not obviously, but 3400 is the next big line in the sand. So we'll see how that one finishes today. But that's been out of the money most of the day. It looks like we might actually be in the money at the moment, that long position on gold. What will be a good buying level for Bitcoin, says Jetin? Well, I mean, technically, I'd be watching that, as I've just said, that 112,000. But you're going against the trend. Let me just, um, I'm not, so this was a big caveat day. We'd hit that 14th of August. We'd hit an all-time high during the day, but it was a massive negative candle. Look at the size of the body of the candle. I say this all the time now. The size of that is significant. Okay, so that's down, a big down one. We had a reverse of that on Friday on the back of Powell's announcement. So it looked like here on Friday night, if you'd walked away from this and not looked at the weekend trading, this was positive. The caveat about weekend trading, guys, is obviously that major institutions are not trading at the weekend. It's retail traders. However, the retail traders might have panicked and got shaken out, and we've moved down to do 112,000. So I'll be watching this 112,000, see how it plays. What I well, it doesn't matter what I think, but what this is suggesting, let's put it like this: what this is suggesting is that we could see a body of the candle on this end of day basis break under 112, and we could close under it for a while. If this holds for 3 or 4 days, that might tempt me back in or tempt the market back in. But technically, it remains weak. Technically, why? Well, because the 20-day moving average is crossed from above to below the 50-day moving average on Saturday. You see the cross there. The green line has been crossed from above by the red line. The red line is the 21-day moving average, and the green line is the 50-day moving average. So it's more significant. You see how the 50-day goes back longer. We haven't been under the 50-day moving average, have we, for a long time until last week. And it looked like on Friday we were going up, but that's the trend down. That was the trend down, and it had been, we'd had tested 112,000 on Thursday, even before Powell's comments. Powell's comments lifted. I'll put more pressure on the dollar because of the expectation of cutting, and lifted Bitcoin here, only for it to sell off over the weekend on lower volumes, so to move down. But again, look at the technical indicators. We're moving lower. We're moving lower. So the floor may not be in, but some buyers will perhaps have been encouraged at this 112,000 level, simply because been a previous resistance level to going up when we were going up. See here, and we broke through it. So bit of a small position around about here. But at the moment, you're going against the daily trend. You're going against the 4-hour trend. There's a 4-hour trend down, lower today, isn't it? We bounced a wee bit in the last two candles today, but there's at 112,000. And the hourly trend is very much down today, isn't it? So interesting. The spike is there. So we're trading that. There we go. See what's happened. We had a big move down here on open last night. Well, on open, I'm saying on open, that was at the 8 o'clock 1 hour candle here in London time. So I don't know what was going on there, but we've tested that low level in this last hour as well. So 110,600. So that 110,595, 110,600 has been tested last night and again today. So that is still short, isn't it? That hourly chart having been very long, suddenly long on Friday post Powell's speech. And then the other interesting thing is obviously the lows later on in the day got lower than the worry ahead of Powell, and that was the downtrend anyway, wasn't it? So all of the positivity from Powell has been eroded, and we're back. And where are we now? Well, we've gone down, we've gone lower again here on an intraday basis. But now, literally as we're speaking, we're back over the 112,000, and we're back into this area here. So difficult to tell. So, but down, big leg down, retrace, big leg down, retrace. Is there another leg lower? That's what that might be suggesting. And again, I wouldn't be buying this unless it broke this, or looking to buy this unless we broke the 20-hour moving average. And we've done that a couple of times today, but it hasn't been significant, has it? Here, as we were rising up, but then we're down again. Intertested, but on the end of the hour basis, we were much lower. So we'll see. There you go. The first test of it, we came down, held, and then it finally broke there at whatever time that was, the 23rd. So that was on Friday. So yeah, that's Bitcoin. So yeah, Jatin, yeah, 112 is key. And it's gold. As you say about gold, yeah, gold is holding on to its gains, which is also always interesting. There's lots of treasuries auctions hitting the market as well this week, so that might help gold. So yeah, gold. Yeah, so there we go. We bought it here, and we've been out in the money all day. Finally in the money at 3375. And I say my first target is the Friday's high at whatever it is, 337. That's a more system somewhere, 337. Take some cash off the market, and we'll move this stop loss up on that round about the three, just below this 350 level is what I'm planning to do later on today to get to target one. So yeah, so that's gold, and that's probably about it, isn't it? Yeah, I've run anything else. And the oil market, 65.35 on the oil market. It's having a better day today. Oil, the hourly chart, been ramping higher from the 20th. We've been over our 20-hour moving average. As the inventories on the 21st moved higher through 64.35 where we were, and through $65. That's a key level we breached today. So oil market having a good day as the US market looking to the Labor Day holiday through $65. So 4 hour is positive. That'd be interesting to see what that might look on my end of day charts, because we were short this and we got burnt on. Was it Wednesday last week? Yes, 80 pips. We lost 79 pips. We lost on that one last week, but that's triple bottom here at 62.50 and moving higher on the 4 hour trade. To the upside, 16.5 has been broke, so that's a significant level. So if you just tip that up to the daily, is obviously that's looking quite positive as well now. Oil, and that's again probably on the sluggishness of the and Russia and exchanging blows over the weekend as well. So I must be one of the worst people for drawing trend lines. I've never been great with trend lines. That shouldn't. When you're on a trend line, obviously, I'm sure you all know, you should be at least two or three touches, at least two touches, and you shouldn't. Whether you're using the body of the candle or the wick to wick, you shouldn't cut through the body. The rule is not to cut through the body of the candle. So, and obviously, all charts are different, but if you're trading on this platform, you've got to use the charts you're looking at, not necessarily. And obviously, all different brokers have different feeds and different prices at different times. And make sure you're trading the spot price or the futures price, depending on whatever it is. Obviously, his is a derivative of WTI US on. So that's been positive from the 20th for the last 4 days, and significantly above the $65 level today, 65.30. That's interesting. Actually, I'll look at that later on today. So if my system, I'm guessing my system would be triggering long on that. It might have triggered long, having had that failed short. I think I got UK oil rather than the US oil, didn't we traded? But I'll look at that later on. So watch my analysis later on tonight for that. But, anyway, I've been blathering on for a Monday for nearly an hour now, guys. If there's anything else you want to have a look at, Jatin, Atu, I don't know if you're still here. Let me know, and we'll have a look at it together. The other, we've got five open positions at the moment. We're long gold. We're short. I don't show you that. No, we're short. Actually, look at dollar Swiss. This is the one we've got an open trade on. We somewhere around here short. Um, Daily, that's fine. That's already hit short. It hasn't actually been hit short. That's where we got in as our stop loss up here at 80, 61. This is our filled price here at 9 o'clock on Friday. We got filled at just above 80 at 80 or 7. And this one is out of the money. So that's our stop loss at 60. We're looking for a target, first target of 79, 77. But this is an end of day basis. This is the hourly chart you can see at the moment. So this is on an end of day basis. So I'm not too phased at the moment as the slower time frame, but it has gone against us from our entry here on the open last night quite significant. It's held on to those gains, the dollar against the Swiss franc. So yeah. Anyway, we'll see how that goes today and tomorrow later on. But that's out of the money at the moment. So that's the other one that's open. The Dow, as I said, we were long the Dow and the S&P 500. So I think I've showed you that. There's the Dow again from. No, I've never. That's the entry. That's our. Is a stop loss there? Yeah, 45. Yeah, and the target is up here. So again, that's out of the money. Industrials are down today. S&P 500 also, we went long on Friday night. 4 hour time frame. Guys, put the hourly time frame, which is a bit better. There we are. 9 o'clock Friday, we went long, and we're out the money. And I can also put that target in the left. Obviously, the target's up here somewhere, but that's the entry of the. Actually, let's do that now. I've got you here. S&P. While I'm on it, I should say, not while I'm here. S&P 500. It's on the Discord group, guys. The target level is 6549. Six. Oh, get rid of that. 6549. These numbers aren't set in stone, my friends. Oh, wait a minute. Where's that one? There it is. It's up there. So now, so I say we're out. Stop loss is it that close? Check that. 6438. Stop loss. Um, 640. Stop loss. So let's stop loss. There's our entry. So again, another one out of the money a little bit. And that's a bit more reactive, that one. So if it breaks this 20-hour moving average, I'll be closing this one okay? Ahead of the stop loss because it's a short-term one. But I'd need to see the candle close and close significantly below. So we've held on for the last 4 hours. So see where that is later on today. So that one may get closed. The Dow is on a more conservative approach, although it's more that has already gone under its 1 hour moving average. Remember, these are end of day. So yeah, we'll see. We may see how that goes. But that's moving lower, isn't it? Not as a particular surprise. And the other one was pound. That's the other one. We were on pound. Uh, I saw that earlier. Pound Aussie is the other one, and that has hit target. Last time I looked at it was this morning. We got this big down candle here, and it looked, there we go. It should be just getting it. Then it didn't do anything, and then here at lunchtime it had gone up, but it's come back down again. So that's target one. So what will happen here now, guys, is this 50% of this trade on my trading platform will have closed out. So half of the risk, whatever it is, it's worked in percentages on my platform and works out in lot times. So 50% of the risk I've taken on the short Aussie, pound Aussie from Friday night is now closed. So whatever the pip value, the point value is, that's what I put up on the Discord group. So here it is. Here's the Discord group. So under trading strategies, every night, or most nights, not every night, I put on what trades I've taken. Certainly, all the forex trades. I do some other types of trades. I don't publish it, but these are end of day trades. So on yesterday, I put in pound Swiss. It wasn't pound Swiss. It was pound Aussie, and it's because I'd put in short, and I was rushing out last night when I wrote this. So it was pound Aussie, and I've corrected that this morning. So that's the target. So we got in at 2.08265, and our target was 20777. So whatever that is, we've made 30, 50 pips or something on that, 50 pips. And our second potential target, I think it's 50 or 40 odd pips. So half of that is what we've taken as profit. So if we've made, let's say, 50 pips, we would have our market is a plus 25, but it's only half. The risk is off, and half is left on. Try and get to 2.0747. I'll see why that goes down. That's the potential target. But what I'll do now is move the stop loss down to an appropriate level. So what's an appropriate level? For me, the 20-hour moving average is usually can be a bit too close. So for now, as it's just gone through target and it's still moving now, I'll move the stop loss down to entry. So even if this reverses, we've still made 25 pips, and we can't lose on this trade basically. So it takes the mindset away. So the panic or the worry, you can't lose on it. So why if it does reverse, you've got it too close. Um, so be it. You've lost. You could have, would have, but you've already made money. Conversely, if you want to be a little less aggressive, is to use the 4 hour. That was the hourly chart. Remember, this is a daily time frame, so you could use the 4 hour time frame. That is an appropriate stop loss level because we could easily get back there. This is the 50 and the 20-day, 20 period moving averages. So the stop loss, instead of guaranteeing that you won't lose, you'd leave the stop loss there. But I'm happy to have that on entry at the moment. But we could go back to there, but we'd get stopped out here and only make 20 pips. If you're a complete beginner, just take all the profit off, at the first target. So you got 50 points banked already. You forget about it. Thanks very much. But when a trend runs, it can run and run and run. As you can see here, we've had a run up here. Look at this. Higher highs, higher lows. Up we go. Before we roll over. Friday night, yeah, it went under the 20 period moving average. It closed under the 20 period moving average. And we got filled here on 9 o'clock, and it's moved lower today. Got to our target, taking some profit. Obviously, why the target was sort of around that area. The next area we were saying was much larger. It was one. I can't remember what it was. In fact, it's near. What did we say it was? 2.747. So 2.747 is not. It's actually not as far away as I thought it would be. 2.0747 is around there. So that second target is just here. So yeah. Alternatively, the other thing I do, and we did with pound CAD, and we made 300 odd points on it, is just trail the stop loss down until the market turns and takes you out. So and leave the open trade on, and that's probably what we'll do anyway. But I'll watch that for that 2.0774 area and see what happens there. But anyway, we're in the money. That's a winning trade. The others are all out of the money at the moment, but hey ho, that's trading, my friends. Right, I'm going to wrap this up. Thank you for your time on Monday, guys. Hope you are all well. Jatin said most instruments you trade are already good. Very good. Jatin, I mean, the beauty of having a bigger account, remember, guys, I'm not trying to sell you anything here. The beauty of having a bigger account, these 25,000, 50,000, even $100,000 accounts, is that it allows you to trade things you may not trade, but if you're not comfortable with that, don't. I mean, my strategy scans about 50 odd markets, Forex pairs, gold, oil, copper to an extent, Bitcoin as well, the cryptos, and on an end of day basis, including indices as well. So, yeah, and if you've got a bigger account, you've got bigger equity to play with. So, anyway, just my thoughts. So, anyway, take care, everyone. I won't see you tomorrow. I've got something to do tomorrow. I'm out of the office all day tomorrow, so I'll be back Wednesday. So take care. Be good. It's an interesting week this week. We've got obviously the end of the. Sorry, that's my calendar gone. We've got the end of. We've got the end of the week, end of the month as well. Oh, sorry, the end of the month, but look at the main events for the week. I think 2 and 3 calendar, although it is um, uh, uh, August. The main event for me is Friday's PCE data. It's the 29th, final trading day of the month. The PCE data, the price index data, the personal consumption and expenditure data. This is the big data point for the week, expected to come in at perhaps 2.9, possibly 3% for the core reading. That's technical now, but so that is going to be absolutely key for where we go in September. Remember also, US traders having a long weekend and not trading Monday, so things getting wrapped up for the month, profits being canned, bagged, profits being losses being accepted as we come to the technical and physical end of the month on Friday as well. But that's the key data point for the week, the core PTE on Friday. So plenty of other things going on. Obviously, normal claims every Thursday. GDP numbers there, Switzerland caught my eye there, and Japanese inflation as well. Some building some more homes data and durable goods as well. Yeah, durable goods tomorrow. That's the one I'm missing for you. So anyway, I'll see you all Wednesday. Be good, take care, be safe, and may the pips be with you, as I always say. All the best, everyone. Bye bye.